Welcome to Real Estate Partners. The housing market is facing growing pressure, and several major trends are reshaping the outlook for buyers, homeowners, and investors. To start, homebuilder stocks surged this week after Treasury yields dropped sharply, raising hopes that mortgage rates could finally ease later this year. Because mortgage rates closely follow Treasury yields, investors reacted quickly to signs that borrowing costs may improve. That optimism pushed homebuilder shares higher after months of pressure from elevated rates and weak affordability. But the housing market itself remains under strain. Mortgage rates are still above 6%, inventory remains tight, and affordability continues limiting demand. Builders have managed to stay active mainly by offering incentives like mortgage rate buydowns and price reductions to attract buyers. At the same time, foreclosure activity is rising across the United States as more homeowners struggle with growing ownership costs. Unlike the 2008 crash, today's pressure is not coming from risky loans, it's coming from the rising cost of homeownership. Property taxes, insurance premiums, HOA fees, utilities, and maintenance expenses have all climbed sharply in recent years. Recent buyers are facing some of the biggest challenges, especially those who purchased homes near peak prices while taking on mortgage rates above 6%. Analysts say the combination of high monthly costs and slowing price growth is beginning to expose financial stress across parts of the housing market. Meanwhile, climate change is becoming one of the biggest forces reshaping real estate investing across the country. Insurance costs tied to hurricanes, floods, and wildfires have surged dramatically, especially in states like Florida, Texas, and California. Some insurers are even reducing coverage or leaving high-risk markets entirely. As a result, investors are starting to shift toward lower-risk regions, particularly parts of the Midwest and Northeast, where climate exposure and insurance costs remain lower. Analysts now believe climate risk could become one of the defining real estate trends of the next decade. Explore more real estate insights and market commentary at Real Estate Partners.